How much more money in-house would you have if you lived in Tennessee instead of California? It's time for a state tax showdown, this time between California and Tennessee. In this video, you'll see what your life could look like in each state. Same salary, same home purchase price, but very different outcomes. The first thing you'll notice is how much more California takes out of your paycheck in state income tax. California has some of the highest state income taxes in the country, with brackets ranging from 1% to 12.3%. And you're about to see exactly what that costs you. But here's where most people get tripped up. The classic mistake is confusing marginal and effective tax rates. What that means is you can't just look at a list of brackets and assume that's the percent taken out of your whole income. The highest rate only applies to the very top slice of your income. So to figure out what you actually pay, you have to do what's called the marginal tax rate calculation. And here's how it works. Start with your total income for a single filer, then subtract the standard deduction for California, then apply each tax rate only to the chunk of income that falls in that bracket. Add them all up and you get your effective tax rate, which for California at this income comes out to 6.4% or $7,702 a year. You can also see the same result on the California state tax calculator. Now let's add in federal taxes and see how it all stacks up. The federal calculation works the same way with the marginal rates, but with one extra twist. You also have to include FICA taxes for Social Security and Medicare. Add it all up and you get total federal income taxes around $27,500, an effective tax rate of 23%. Combine that with California's $7,702 and your total taxes are $35,250. Divide what's left by 12 months and your take-home pay monthly is about $7,063. Now Tennessee, whole different story. There's no state income tax at all. Tennessee is one of 9 states that doesn't charge an income tax, and I'll pop those on the screen right here. So we do the same math and your take-home pay jumps to $7,704. Now let's talk about property taxes, and here's where things really start to get unfair. What you'll pay depends not just on where you live, but even when you bought your home, and the difference is staggering. Here's a $600,000 home in LA. Zillow estimates the taxes, and under Proposition 13, since you're buying it at $600,000, your tax is reset to that price. And what that works out to is $7,320 a year, or $610 a month. Now once you buy, it can only increase 2% a year. That's pretty good, right? But what that also means is that your neighbor who bought the identical house 20 years ago might still be paying just $1,500 a year, while you're paying 4 times as much in property taxes. Now let's check Tennessee. Here's a $600,000 home outside Nashville. Zillow's estimate here is a little bit off, so we'll head to the county site. In Davidson County, where Nashville is located, assessed value is calculated at 25% of the appraised value. Then you have to check which district you're in, the General Services District or the Urban Services District, because they have slightly different tax rates. But that gives us a property tax bill of just $3,798, or about $316 a month in the Urban Services District. But here's where you really feel it. The Tennessee home at this price is move-in ready and beautiful. The LA home at the same price, not even close. To get a home there, like the one in Tennessee, you'd have to spend, well, take a look at this next Zillow listing. But here's the most shocking part of all of this. This housing crisis in LA didn't have to happen. Why is it that middle class and even upper middle class families cannot afford the American dream here? Well, the data explains it all. From the year 2000 to 2023, LA County added 700,000 people, but only added about 100,000 new homes. Meanwhile, Davidson County, Tennessee added 85,000 new residents, but built 76,000 new homes in the same period. Why didn't LA keep up? Well, because California's intense housing regulations make it incredibly difficult to build, even as demand was soaring. So what does all this mean for your pocketbook? Let's get to what you're here for, the showdown. How do these 2 states really stack up against each other? Well, all things being equal, here's California's monthly take-home pay minus monthly housing cost. And at the end of the month, you're left with $3,453 in your bank account. Now let's look at Tennessee. Is it going to be better or worse? Well, here's our monthly take-home pay, our monthly housing cost. And at the end of the month, you're left with $4,387 in your pocket. That's a difference of over $900 every month, which adds up to more than $11,000 over the course of a year. And if you invested that extra money in a fairly conservative investment yielding just 4% a year, here's how much extra wealth you could build over 25 years. And here's the thing, it's not just housing and income taxes. Tennessee's lower sales taxes, lower gas taxes, cheaper utilities mean that the gap between these 2 states is likely even wider than these numbers show. And here's the other thing. This video isn't just about taxes, it's about public policy, and about busting the myth that either political party has all the answers, because the real world just isn't that simple. Sometimes policies that look red or business-friendly on the surface actually end up benefiting regular people like we saw here. And you'll find plenty of examples like this in other videos on this channel. And you'll also see videos here that call out conservative policy failures. For example, did you know the real story of defund the police in Washington state actually has conservative origins? Click here to watch that one next. The Founding Fathers were actually against the idea of political parties entirely, and I can't say I disagree. The good policies are often somewhere in between. So if you want to keep getting more content like this that helps you think for yourself, hit like and subscribe, and I'll see you next time.